Are you looking for down payment assistance, but you find that everything out there is made for first-time homebuyers or for people that earn less than a certain amount of income? The Minnesota Housing Finance Agency has a unique program called the Monthly Payment Loan, which is down payment assistance up to $14,000. The difference with it is you don't have to be a first-time homebuyer, and that the maximum income limits are really generous. Like for one or two people, it's $139,000, and get this, they don't count the household income. They're counting the income of the borrower that's on the loan. So this is a very flexible program. What's different about it is that it is a 10-year loan. You repay it over 10 years. So it does add to your monthly payment. So if you're looking for down payment assistance under these circumstances, the monthly payment loan from the Minnesota Housing Finance Agency is there for you. Hey, I'm Peter Lindquist. I've been a mortgage lender in Minnesota for over 30 years, and I'm going to share some of that experience with you today. If you like today's video, give it a thumbs up and subscribe to the channel. So the monthly payment loan down payment assistance program is up to $14,000 currently. That's for 2026. That can change at any time, and it has changed from year to year. And the primary purpose that we use this is for people that are moving up. Maybe they're sold their house and didn't net as much money as they wanted to. Or how about you own another house, you rent it out, and now you're going to buy a second one. You can use the monthly payment loan in Minnesota Housing Finance Agency with the Step Up program under that circumstance, as long as it's only one other piece of real estate and that other real estate does not have a Minnesota Housing Finance Agency loan on it. The other place where we commonly use it is when we run into down payment assistance problems due to income. So the deferred payment loan is the one that most buyers want to try to get. It's also $14,000. It's 0% interest, 0 monthly payments that are due. It's still a loan, it's not a grant. But it does have much more conservative maximum income limits. So if you're one or two people, at least currently, that's $85,000, and that's household income. With the step-up loan, that same income limit is $139,000, but it's only the income of the person that is on the loan. I've had circumstances where the borrower earns, $90,000, and that's enough to qualify for to buy the home they want to buy, and their partner earns $200,000, but they sold their old house and didn't have much money left over, so this down payment assistance loan worked out perfectly. You can only get this loan along with a Minnesota Housing Finance Agency first mortgage. So you do have to deal with a mortgage lender who offers MHFA loans, and that is just plainly not everybody. It's especially not national lenders. You need to be looking for local lenders. I'd be glad to help you if you're looking for a mortgage lender. So this program is different because it requires a monthly payment, thus the name monthly payment loan. The interest rate is the same as whatever the first mortgage rate is, and you repay it over a 10-year time frame. On your first mortgage, that's a 30-year time frame. This would be 10 years. That means that if you borrow $10,000 to $14,000 on the monthly payment loan, it adds a significant amount to your monthly payment because you're paying it off pretty quickly. But if you qualify in every other way and you're struggling on down payment, this is a perfect program for you. I had a borrower who used it twice. She used it once to buy the home, lived in it for 5 years, gained a bunch of equity in the home, sold it, took the equity, paid off her student loans, and used this program again the second time she bought a home, so that she only had to use $1,000 to buy the home again the second time. That's very different from the deferred payment loan programs, which you have to be a first-time home buyer in that case. The one thing that we can get pretty creative with this program is that maximum income limit. It's allowed by Minnesota Housing. That maximum income limit is called the qualifying income. And qualifying income is based on your base income. You can, if you all you need to qualify for the loan is your base income, so I mean not including bonuses and commissions and that sort of thing, then you can qualify for this program. That's true even if you've got two people on the loan and together you earn more than $139,000 on your base incomes. We can exclude one of the incomes if you qualify on the main one. That means we can use this program just in so many different ways. This program can be used with the Step Up program through Minnesota Housing Finance Agency, but it can also be used with the Startup program. So just a brief note about those two programs. Startup program is a first-time homebuyer program. You can't have owned a home in the last 3 years in order to qualify for the startup program. The main difference with the startup program is the interest rate is slightly better than the step up program. But if you earn less than the startup income limits, which is $132,400, but you earn more than the deferred payment loan, which is $85,000. So your income is between $85,000 and $132,000. You can choose to use the monthly payment loan, even though that it has a monthly payment. If that's what you need in order to qualify for the loan, that's why you would want to use that program. One other unique feature to this program is that if you vacate the house and rent it out, you don't need to pay it off immediately. So with the deferred payment loan, if you do that, it triggers a payoff. So you have to pay off the loan. And that's substantial. It's $14,000. The monthly payment loan, you don't have to do it. I used this for a borrower a couple years ago where they were buying a duplex. So you can buy an owner-occupied duplex with MHFA. And they were thinking that they were going to buy that and then eventually someday rent it out and go move to buy another one. And we use the monthly payment loan specifically for that reason. Now they qualified for the deferred payment loan, but the borrower has the right to choose. And so they chose the monthly payment loan because it doesn't have that same kind of requirement to pay it off in that circumstance. The last thing that I want to mention about it is that when you look at the payments on this program, they can be pretty substantial. And so for some people, it's like, well, I don't want that. But I want you to keep in mind that this loan is often refinanced. The first mortgage is generally higher than the mortgages on the open market. The state of Minnesota sets those rates, and they have to set them higher because it has a higher risk. So if you've got a first mortgage at, let's say it's 7%, and a second mortgage with the monthly payment loan, that's at 7%, you're paying that second mortgage down aggressively. And that means that, when mortgage rates hit maybe 6%, that's going to be a time where we can refinance those two loans together. So quite often, borrowers look at this as a temporary solution to the problem of not having enough money to buy a home, knowing that at some point soon they could be in a position to go ahead and refinance, which can have a dramatic difference on your monthly payment. So monthly payment loan serves a specific purpose. And if you fall into those categories, don't give up. If you owned a home in the past, don't give up. There is down payment assistance for you in the state of Minnesota. Thanks for taking the time to be with me today, and I'll see you next time.